Well, welcome back, everyone. This market, as mentioned yesterday, is dressed to impress, and it continues to present as such. When we started the week, we had an idea of likely outcomes using a combination of our powerful tools. I'm going to share that with you in just a moment. What you see on screen is the August 5th low, the V-shaped bounce, but the slowdown that happened on Monday and really last Friday from the reversal last Thursday implied a lower probability that we'd break above this structure at 540 bucks and 31 odd pennies. Now that structure is the center of a very important channel, a structural channel going back to October of 2022, the bottom of the market and the top of the dollar. It's a bell curve of a channel. 2 standard deviations above the center is that red line, 2 standard deviations below is the dark green line. And you've also got that 1 standard deviation on below. Now, what we ascertained at the beginning of the week was the data coming out on Tuesday and Wednesday this week is likely to be softer and not punished if we've got slightly warmer or on target inflation, on target with consensus, that is. And if we do get cooler inflation, well, it would be rewarded a whole bunch more. And that opened the door, technically, for Monday, which was rather data-less, to simply follow through with some slight carryover momentum from the last week reversal on Thursday and present very likely with a candle that has a wick, it pulls back, it has a tail, and then it comes up getting ready for a potential rise on Tuesday and Wednesday. So this was presented to members in the active trader room ahead of the start of the week. And the blue flight path is the one that we had qualified as likely. And the top of that blue flight path target is around $546. Well, today we got up to roughly $545. And this is the market, the SPY. Now, why such a sharp potential turn down? Well, the softer data coming out on the inflation side is expected. Oil came down dramatically. PPI got rewarded much more yesterday than it normally does. CPI came in on target, not showing any further major declines, and the market didn't punish it. We did have a small refueling pullback inside the day, but if you look at the Monday and then the Tuesday, Wednesday picture that we painted, followed by a drop on Thursday driven by what? Well, harder data. Data that goes to the heart of consumption and that goes to the heart of growth. So if we take a look at what's on screen now, you'll see that Monday was a candle that went up a little bit higher, came down, and closed off the low. Tuesday and Wednesday are rising. We didn't quite get up to the 545.87 penny mark as of yet, but there's still some room technically for that to play out. Is it likely going to stop in that territory? This is where that outlook that you just saw that we provided to members in advance of the start of the week, using powerful tools exactly like these to help make a higher probability decision and work against a plan. So what we've got is a daily and a 4-hour chart of the ES, the S&P E-minis. And you can get an idea of where it is right now, 54.83. And what you're looking at very specifically is the Champion Trend Pack, Wealth Chart member exclusive tools that come with the Wealth Charts Ultimate membership on an annualized basis. And of course, those other tools that are on here are add-ons like Rob's ITP, TRP, my triple S indicator. Now, I've hidden the subcharts. I want you to focus on chart, and we're going to look at the daily chart to start. We've got some buy signals underneath today's candle. Why? Well, we've got continuation. We're above a champion cross sell zone. However, we have not evacuated the sell signal state entirely, and we are still below a 50-day moving average. Price is still below the top of the channel. So the TRP buy is not qualified as a strong one as of yet. Price is still below the channel. Okay, and for those of you that are newer TRP students, welcome, of course. And what do we have in the subchart? We have the blue dot. It happened in the lower portion of the channel. Okay, so that's all good. However, and within a 3-bar radius, of course. However, what we're dealing with over here is still pushing water uphill into major resistance. So where is this market going? Well, if you take a look at the fuel gauges using the Spike 2.0 tool, we still have some core bullish fuel left to use. We could start using high octane bullish fuel, and this can V-shape itself up into a new uptrend. That's one option. However, I would temper that option as the 4-hour chart does have an open target 2 sitting at 55, 25, 23. And based on where we're trading right now, add about 40 points to the ES. That's $4 higher on the SPY. Now that gets us into just underneath the $550 marker. Now that's the top of the weekly pivot range. That is a very extended condition, and that is precisely where the market had some serious difficulty holding up. I was right around there. And that's where the drop really started into the Japanic Monday. So that was the Thursday and Friday and Japanic Monday. Now, when we look at the 4-hour chart again with our technical tools, we can tell that the buy signal state is still intact. However, as I unearth the subcharts over here, you'll see that unlike the daily chart, okay, where there's still some room to see that slow spike rise, the 4-hour chart has already got the slow spike well above the top of the channel. It's overstayed its welcome. We've already used up most of the bullish momentum using the TRP momentum crossover lines. And the Triple S channel is sloping down, and the soldiers have conquered new land for their kingdom. And what they are about to do here is finish the victory tour and come back down and grab the blue and the black line and push them down into the lower half of the channel. This is a typical outcome, and that would be typical if we rise a little further overnight through the China data and ahead of the retail sales, and the retail sales data comes out tomorrow morning at 8:30. If it is a stark shutdown of the consumer, okay, we've got a very negative event probably in front of us, as it's harder consumption data that would tell the market and the smart money, who has probably already started to sell into this and very likely has, that the Fed is late as usual, and we're going to run into a consumption crisis, and it can spiral. So the Fed's going to have to take that crisis and a market sell-off as cover to potentially take a rate cut sooner than later. Well, September, they're already looking at a 50 basis point cut. At least the market's looking at it. So right now, I'm going to leave you with the insight that the market is telling us that it's used up a bunch of that bullish fuel. It's running low. It's got enough to give us a potential 40-point move higher. I would say that half of that is reasonable and can transpire before we see the retail sales data. Tomorrow morning, it's kind of binary. We see the retail sales data come out, and it is a huge win for the consumer. Well, clearly they were able to borrow more to buy more. The market can continue this bounce, and we could see anywhere between 550 and 555. If we get a slam down on consumption, well, the market would go that way as well, at least initially, and we would be on path to start that journey down back towards the Japanic Monday lows of last week, if not slightly lower. I'm going to leave it right there and make a couple of comments and a shout out to Dr. Keith Wade. He did an incredible presentation today. Folks were raving about it. Hope you enjoyed it. Hope you had a chance to get there and listen in the tools and strategies that he uses in markets for live trades and futures options, ETF stocks. They're invaluable in an environment like this. Capitalizing on large moves, both directions, in a market like this is always advantageous. I hope you enjoyed the video. See you in the next one, and have a wonderful rest of your day. Thanks for watching.